Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York, which means that the equities markets in the United States are just getting ready to close down for the day. Of course, a shortened trading day tomorrow as we go into the Christmas Eve holiday. But as for today, we do have U.S. equities, Dow Jones Industrial trading higher on the day, almost a percentage point higher, 0.83% at 17,396 and change. When we look at the NASDAQ, that is also trading higher, but in terms of a percentage gain, we're looking at the E-mini NASDAQ, the NASDAQ 100, not the 500 or just the standard NASDAQ, but that is up about 0.33% at 45.77. When we take a look at the Standard & Poor's is trading higher, well above 2,000 again, 2028, up 0.68% at 2085. Now, of course, the key when we look at these markets is where it is trading relative to some of the more long-term moving averages. We have seen this market attempt a couple of rallies only to get fizzled out or only to really come down at a certain point. This last rally here took us up to just below 2080. I believe 2078 was the high tick that we saw here. And of course, now we're going into our second day of consecutively higher prices after hitting a low well below 2,000. When we take a look at the fib retracement, and of course we're looking at this fib retracement which comes in from 1831 up to these tops at about 2109, so quite a distance. And when we do that, we find different levels that we should see some sort of support or resistance. Support, we've still got a peg right now at about 2,000, 2003. That is our 38% retracement level, and I believe that is our current level of support. Resistance right now at about 2043. That's based upon this particular level, which is a 23% retracement level. Now, the other thing that we do want to look at is relative where we are looking at in terms of the 50-day moving average and the 200-day moving average. Of course, the 200-day is a solid blue line here. This dotted line here, that represents the shorter term or the 50-day moving average. And although it's difficult to see, in fact, I would have to really move this up a bit. I'm still not able to, but you can see that the red is just above the blue, which means that the 50-day moving average has crossed above the 200-day moving average. And to me, that is fairly significant. The one thing that we have to, though, be careful about is the fact that we've got a holiday weekend in essence, in effect this week, and then a holiday weekend, in essence, in effect next week because of when Christmas falls and when New Year's falls. So because of that, we're going to have dynamics of a marketplace that has an extended amount of potential volatility because of a decrease in volume. So we absolutely want to pay attention to that. Now, other markets that we look at, they're quieting down today. Dollar index, US dollar, is trading lower on the day, but again, nominally so at 98.21, off just over 0.1%. When we look at that and compare it to what we've seen in the euro, of course, you can see that over the last 3 days, although they have been small moves, they have been moves to the downside, which is counter to what we would have anticipated with the fact that we've just had the Fed announce the first rate hike in almost a decade. Euro dollar, 3 days, although small moves, they are small moves to the upside. Now, in terms of the euro, that has moved above what I consider to be resistance, so it will probably now, in fact, become support. And that's at roughly 109. Support on the dollar index has not come in, but should come in at about 98. We're at 98.21, just shy of that. And I'm looking at resistance right now at about 99 in the dollar index. And then crude oil is also trading higher today, nominally higher, but it is up a full percentage point per barrel at 36.17. So we're well off of those 35s and 34s that we saw. You can see this 34 down here on a daily chart. But lo and behold, we do have light trading, but we've had a real gap in the market. If this chart is reading correct, it is absolutely a gap. And according to gap theory, it will have to come back and fill that gap. This has been Gary Wagner wishing you, as always, good trading. We will have a shortened report tomorrow, and depending on the activity that we see on Friday, we might or might not, we will monitor the market, of course, but might or might not have a report out. For all of those that celebrate Christmas, I want to wish all of you a Merry Christmas. And as I said on the gold forecast, more importantly, to all of my subscribers, I want to wish you peace on earth and goodwill towards each other. Have a great day. Bye-bye.